Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be talking about all things to do with the Bitcoin rainbow chart, where we are today, where we might be in the future. I'm going to compare this against the fear and greed index, the alt season index, our current price action, break that down, see where we're at, what I'm looking for personally. I also take a look at what is the average time that it takes from any of these halvings to the next peak, as well as when we break above former all-time highs, because those are two different time frames right there. I'll show you Bitcoin dominance, where that is at today. And then I had a great question or a comment in last week's video. Someone asked for my thoughts on what the change in interest rates or the Fed cutting rates might mean for crypto. So we're going to get into all that in this video, starting off just by where we are at today. You guys can see that each halving, and we just had a halving not too long ago, each halving we go up a zone in this rainbow chart. So the first halving we were in this fire sale zone. The second halving we went up another band. Third halving we were in this accumulate zone. Last time in the still cheap zone. So that is an interesting pattern. Maybe in halving number 5 in 2028, we are going to be in this yellow holdo zone. And what's interesting to think about or look at that is if that pattern holds true, then Bitcoin in the next halving, again, if the pattern continues, we don't know what's going to happen, but if it does, look at that price range. We're looking at 213K to 277. We'll see, but wouldn't that be something if this continues to hold true? Will it? I don't know. For me personally, when I look at it, when I think about that, it seems pretty unbelievable. However, I've been in crypto since 2017, and it seemed pretty unbelievable for Bitcoin to ever be at 64,000 when it was only at 4,000 way back here. So anything can happen, and we'll see. Also, what else I've noticed here is that after each halving, you notice how the price goes up for the most part, but really only once has it gone down, excuse me, one color zone completely. So you can see here the price, it says Bitcoin was around 670 and it got somewhere in the 500s. So I guess comparing, you could say that maybe that would mean because we've been in the 60,000s that, if it did go down a zone, that maybe Bitcoin would get somewhere in the 50,000, something like that. So we'll see if that happens. Let me get a sip of some water. So that is just something to look for. If we did go down, that 50,000 range might be the lower end, but that's just going off of this rainbow chart. Let's get into fear and greed. We are still up into high greed, getting close to extreme greed. You see here we've leveled out for a bit. Zooming out the last year, you can see that recently that we were in this downtrend and now this is reversing. So we have had higher lows, higher highs. It is leveling out here. We have this line right here. If I were to draw a line somewhere around the 70 range, you can see we've been hovering around there ever since really late October. And that's when this whole bull market started with stocks and crypto. Something to keep an eye on. Also with fear and greed, you can see that when greed has spiked, this was a mid-cycle top in 2019. I'll show you that. That was right here. But the other time that greed spiked in here, look at the dates. It was around December of 2020. That was not the very peak. The very peak was around March, April. For one of the peaks. The other one was in November of 2021. So greed does not have to be all the way up here in the 90s for the price to also be high. And you guys can see this double top right here. So November and as well as March, April 21 was the last time. So the longer greed stays higher, I think the better that is for crypto overall, as long as we're staying above even 60, because we do have a diminishing rate of returns. That doesn't mean you still can't make amazing money, but instead of, let's go back to the rainbow chart, instead of getting a 2000x or a 200x, last time maybe even a 20x, whatever it was. Maybe we're only looking for something like a 3x from this point on. So just something to keep an eye on. Next, let's go over to the alt season index. And alt season so far, it is curling up. We have higher highs, higher lows. We were in this downtrend, and I am wondering if alts are getting ready to spike. Now, that doesn't mean every alt. There are tens, maybe even hundreds of thousands of altcoins. But in 2020, 2021, let me zoom down here a little bit. We had these three spikes. The true alt season was in here, and in 2018 as well. In the first week, we had alt season. So prices for many alts were peaking in these areas. It depends on the alt. You'll have to look up the trading view charts for the altcoins that you really like, that you're interested in. They all run at different times. But when Bitcoin dominance tanked, that was on this middle peak. And I am wondering if we're getting ready to have one of these peaks pretty soon here. I don't know if we're going to get just one peak, three peaks like here, four, who knows. But this alt season index does look pretty bullish to me. Things seem a little too quiet, so I'm curious about that maybe we're going to get some good price action pretty soon. And speaking of price action, let's go to the weekly. Something that I am looking for, this gray line here, I'll have this dashed line right on it. It's actually already on it with the current price. That is where I tried to put it as close as I could to the 2021 top that was made right here in November of 21. You can see I was just a touch lower. I'm trying to get it right on top of that green line there. So that is where the 2021 top was in November. And I have the candles on Heikin-Ashi. And what I am looking for is one of these weekly candles to open and close completely above that line. Not just peak above it with some wicks, but to have a complete close. Now, we do have this weekly buy signal playing out. That's this green dot. You also see these moving averages here. I'll probably turn those off just for a little bit, make things clear. Oh, I turned off the wrong one. My goodness. Clown show over here. We got to do that one. There we go. So we do have the 10 and the 20 at least, those short green and red lines. But I do want to see one of these full candles close above. And if you're wondering why I'm using Heikin-Ashi, well, I can just show you right here. If we go by just the regular candles, there's a lot of noise in here. And maybe some of you guys prefer this, but I think the Heikin-Ashis kind of bring order out of the chaos a little bit. So you scroll down and you see how much cleaner it looks. You get a better idea, in my opinion, of the trend and where it's going. So that's why I like Heikin-Ashi. And yeah, we'll see. Can it close and break above? And if it does, the reason I believe that could mean very good bullish things is look at these gray lines. Again, this is the former all-time high made from 2017. Once it closed above, we were on our way up. Now, if you're wondering how much time it took to get to the very next peak, that was about 120 days. So you divide that by 30, that's about 4 months. So about 4 months from the 2020 to 2021 top. Again, that gray line, I tried to put it as close to the 2017 top. If you're wondering what happened in 2017 or before that, what's interesting to me is we kind of had a similar occurrence. Now, we only hit it once, but you can see the wick got above its former all-time high. I don't know if it's 2013 or something like that. Let's take a look. Yeah, around late 2013. But you can see here, I'll put the dotted line there. The price went up to the former all-time high, and then it got slapped down. And not until this is about April of 2017 that things really continue. Now, maybe we're looking, for me personally, I'm looking more for a candle like this, not just a little bit of a candle body, but I want to see a lot of the candle body, if not the whole thing. Now, fake outs can happen. This isn't a guarantee. There's plenty of charts out there to show that all because a candle closes above an all-time high doesn't mean that it can't come back down. But if you're wondering the time it took from the from the candle body when it was closing above to the next peak, this was about 224 days. So again, 210, 240, that's like 7 to 8 months. So maybe you're thinking that with that range of what we just looked at from when those candle bodies closed, that maybe we're looking between like 4 to 8 months. Okay, 4 to 8 months from when we start closing above till the next peak. Now, I'm going to combine this with another pattern I've noticed. And before I go any further, I'm being guilty of something that drives me crazy with other YouTubers within the crypto world, and that is getting too caught up in predictions. Guys, all because we notice patterns does not mean our predictions will come true. I think Bitcoin, in going to this rainbow chart, the reason why so many people talk about this, including myself right here, is because we do have these patterns. But sometimes I think patterns can kind of put people to sleep. And, if this was a exact science, there would be so many more billionaires out there. So all because we recognize a pattern and try to apply a general range to what we think is going to happen next, again, no guarantees in this stuff, does not mean it's going to come true. Every time is different in a way. Last time, people weren't thinking there was going to be a double top or a 50+% correction in between, or all the stuff with Elon Musk and Dogecoin. Last time, people didn't think there would be a black swan event at the bottom that would send the price down another 10% overall. And this time, people didn't expect there to be a new all-time high before the halving. So every time that we go through these cycles, different things can happen. Do keep that in mind. Don't get caught up too much in predictions. The way I look at technical analysis or any of these indicators is they're just extra tools in our tool belt, and we can maybe try to look for a range, something to expect. And if things all of a sudden are very different from times before, then we can react accordingly. So that's my plan, or how I base part of my outlook off that data. I don't let it guide my decisions. Rather, they're just extra things to inform my decision. So what I wanted to add to that, though, is, and I have these lines down here, this green line and this red line. And what I have here is that if you average out whenever Bitcoin makes a new all-time high, if you average that out to the next peak, on average from those other cycles, so every time, let's say December 2020, it was breaking the all-time high from 2017, and then the very top was here in November 21. If you average out all the times that happened from before, you get about 300 days. And so this time was different. As I told you guys, the yellow line here is the new all-time high when it was created. The white line is the halving. It was the first time that we had a new all-time high before the halving. Okay, the white line's the halving, yellow line's new all-time high. This is how it's gone every other cycle before. White before yellow, halving, new all-time high. This time was different. And so I was curious. When we take the average from the new all-time high to the overall peak, we get 300 days. And where does that put us from this new all-time high yellow line at the end of this year? And so this isn't me predicting that the price of Bitcoin is going to peak the very top at the end of this year. That is not me saying that at all. Now watch that happen, but I don't think it's going to. But I consider this maybe the beginning of the range of when to expect a top. Or the peak to top. Doesn't mean it's going to. But if you take the average from the halving, again, this is a white line, if you take the average from each halving to the eventual peak, the amount of time, you add those up, you divide them out, that average is around 484 days. So 484-day average from the halving to the next peak. That puts us in August of 25. So let's go over to the rainbow chart and take a look at where the prices might be. Now, you can see here in the rainbow chart, it's in this red band for the first three peaks. Now, here it's kind of in the middle. The last time we only got up to the second highest band, and then the next peak, the orange band. So, conservatively speaking, I'm only going to be taking a look at this orange band, the third one down, because we do have diminished returns. Again, I know that sounds negative, but it's not me being bearish. I still believe Bitcoin can go higher, much higher, and that there's great profits to be made, whether in Bitcoin or other altcoins, which I do videos on. I do videos on Coinbase altcoins, especially the top ones. But if you have any requests, let me know. I also talk about Bitcoin mining stocks and the Magnificent Seven and earnings reports, all in other videos. Check those out if you wish. And what I am looking for is, just conservatively speaking, this zone right here. Could it go higher? Sure. But I think this is kind of a good, happy middle ground of it. Basically, what I'm trying to do, I'm not trying to give ridiculous predictions. This is one reason I made my YouTube channel, is that there are so many channels with ridiculous predictions, and I really believe people do that to use their viewers as exit liquidity. They are saying, I believe altcoin X, let's say XRP, Ripple, is going to $10,000, which is ridiculous and not true. It would have a market cap of 500 trillion, which is 5 times the global GDP. Again, insane. But I believe people say this stuff. And so even when the price of these cryptos top and these guys, the YouTubers, are taking out money, all the suckers, the retail dumb money, no offense, that's just the term for it, they're still putting in money. They're still buying what these other people are selling. So I don't want to do any of that. I want to tame our expectations, try to be realistic. So again, let's go back to that 300-day mark. Okay, let's go back to right here, 300 days from new all-time high to peak. So we're looking at the end of this year and then August of 25. Okay, 300 days. So we're going to take a look at, there we go, right there, around there. That orange band shows a price between 145 and 187K. I could see it, and to me that seems pretty reasonable should we have another bull run like we did in here and here. And for any of you new to crypto, I know that seems unbelievable. Let me tell you, being in crypto since this time, I've seen the unbelievable happen once, twice, even in the bear markets. Remember this bear market? I was not good at investing or trade vesting back then. This one frickin' stung. But in here, I was prepared for it. I knew when to sell. And well, I didn't sell the very top, but I still made great profits. And when there was a lot of disbelief with how bad things were getting and the FTX crash with Sam Bankman-Fried, SBF, if you guys are, if you know what I'm talking about, it was something. BitConnect back here. Shout out Carlos Matos for the OGs. Comment below if you remember BitConnect and that whole freaking scam. But this time was unbelievable for people. So I've been through 4 unbelievable phases of crypto, and anything can happen. So right there, 143 to 185K. Hey, we'll see. If the top is early, maybe that's a range we watch for. And then the other one, I already forgot because I freaking ramble too much. I try to be better. I promise you guys, every video I try to get to the point quicker. It's a problem. I get paid to be a consultant in my real job that I have, and sometimes I just can't shut up quick enough. Anyways, 175 to 225. To me, this is what I prefer. Will another quote-unquote 4-year cycle happen? I'm kind of leaning away from it, and I'm going to get into why that is when I talk about the interest rate part that a viewer asked for me to talk about at the end of the video. But with all the inflation issues and the where the rates are at right now, I'm leaning towards the earlier end, later this year. But again, no one knows the future. Things can go up and down and up, sideways. Who knows? But the way I look at this at the very least is maybe the next top is somewhere in this range. Maybe it's in May of 25. Maybe it's February. Maybe, heck, maybe if it's even close to this in November of this year, which I know puts us before. But whether it's a month before or after, I don't care. I'm just kind of taking a look at this as the general range and average. I'm taking a look for the candles to close above. Let's move on to Bitcoin dominance, and then we're going to go into the interest rate part. Bitcoin dominance. Now, for those of you who don't know, when Bitcoin dominance tanks, you see all these red lines. When it tanks and goes down to this low 40 percentile area, that has been the time typically to get out and take your profits in crypto. So here you can see the date. It was early January of 18. I'll tell you, altcoins, they were running hard until that very first week of January. The January 8th, it's ingrained in my mind, that day sucked. The bottom, the floor fell out on the whole friggin' market. I could add so much more money if I wasn't being stupid back then. And then here, alt season did take a little longer, and it was about middle of May. Now, if you don't believe me, we can go over to the charts here. And again, remember that middle of May area? You can see the date at the bottom. In here was the alt season. So we had about 4 weeks. It's really hard to time the top, guys. So far, that has been a way to indicate where the top is. There is another indicator I'll show you. Actually, let's get rid of this one. I'm going to show you the pi cycle one for any of you guys that don't know. And it doesn't mean these indicators have to ring true again, but you can see this one as we zoom out. It says pi cycle high, and this is called the tops and bottoms a bunch of times. So it says it up there. Pi cycle high right at the top, pi cycle low at the bottom, high, low, it says it there. So you can use this indicator, it's free. Here it said pi cycle low. I truly believe this probably would have been the bottom, but then we had a black swan event, and it was like a 9% overall correction. So have that pi cycle high, the indicators, pi cycle, Bitcoin high, low. Again, there's no guarantee this thing has to strike again. But you'll notice how much higher it gets above that white line, that moving average, before it triggers. And it got to that white line when it broke the new all-time high, but then we've been going sideways. And this is what typically happens, by the way, in stocks. I'll pull up a stock like NVIDIA, for example. Even one of the best stocks in the world is that usually this is what happens. If a stock hits the line, it'll go sideways, or it might ride up the line. But it's very rare to get it going much higher. Now, NVIDIA, the fact it is much higher than that tells you, hey, maybe this thing's overvalued and people are going to be taking profits. So you take a look at it that way. But sometimes things can go parabolic and just nuts. And that's what's happened with Bitcoin before. When it starts going way above that pi cycle line for a little while, this is just a few months here, that's an indicator to look for. So again, with the Bitcoin dominance, let's get rid of this here. It's kind of messing up the view of it. With the Bitcoin dominance, what am I looking for? I have this crappy trend line here. You can see like it's tagged it a few times, kind of in the middle of a lot of things back here. But this line's right at around 57. And we also have this angled trend line too. Hit this peak, and they kind of bisect here at around August of this year. Yep. So my minimum base case scenarios for dominance to get up here. Some people are calling for it to get even higher to the low 60s. Maybe it will, or maybe it just wicks to here and then crashes down. But if it does crash down to the low 40s, do have a plan and be ready to take profits. And guys, with anything, Bitcoin or altcoins, there's no guarantee that these altcoins and cryptos have to surpass the prior all-time highs. It might only by a smaller percentage than what you're expecting. So do have a plan, whether it's a long-term or medium-term plan, have your own plan so you know what to do. Last thing we're going to talk about, we're going to go to the interest rates. We're going to talk about what interest rates mean as far as crypto. Now, luckily for this viewer, and for any of you who are curious, I also look at the S&P 500 and stocks and stuff like that as well. By the way, you're like, what the hell do all these lines mean? So the green lines here were the peaks for crypto, for Bitcoin. So all those peaks that I showed you on the rainbow chart, this peak, these two peaks, this one, okay? I put all those peaks with these green lines here. And something you might notice is the market kind of tops around those times. Now, there's been a couple times it's ran up a little further. The first peak last time, and then one of these peaks back here, it ran up a little bit. But oftentimes there's been sizable corrections, whether the COVID correction or other corrections afterwards. So do keep that in mind with the next peak. Sometimes it coincides. The other two lines I have going all the way back here are these red and white lines. Do you have any guess what those are? Well, the white line is the peak of inflation. So last time inflation spiked, this is where it was. Last time we had an inflation spike, and I know it wasn't the biggest one. People weren't talking about it, but this is where it was. A lot of times inflation spikes aren't too far away from the market bottom. So it's just something I wanted to tag. The other lines, the red lines here, is when the Fed first cuts rates after holding higher for longer. So the first rate cut, it's also when the yield curve uninverts, if you're familiar with that. Let me drink some water. And so what you might notice here is since the Bitcoin cycles have started, we only have 2 data points for inflation and rate cuts. And if you split those up, we truly only have 1 data point. Only once have rates been cut after being held for a while in crypto. And it was here in June of 19. Do you remember where Bitcoin was around June of 2019? I do. Guys, look at this on the fear and greed index. Okay, here on the rainbow chart, and you remember where it is? It's right here. So right when they cut rates, the bottom was coming later. Now, we did have this black swan COVID crash event. Let's go back to the S&P because it's not too dissimilar from the crypto market overall. But after rate cuts happen in the S&P, things went up a little bit. Let's measure that out. I'm just going to draw from the middle here. I know it's not completely accurate. It went up 20%. That's huge. And then obviously we had this gigantic fall. I believe it's like 30 some percent. Anytime the S&P is correcting over 20%, you do not want to be missing those areas if you're a dollar cost average investor like myself. Again, it's hard to know where the true bottom is, whether it's a 30% correction, a 20%. How much was this last one in the inflation dip? 25%. These back here, they were brutal. They were around 50%, 60%, whatever. So 50-ish percent in the dot-com bubble and the great financial crisis. So maybe you're thinking right now that, when the Fed does cut rates, and who the hell knows when that's going to be, whether they're going to be pressured by politics or what. But if you're basing this off the last 3 times, you might be thinking to yourself, well, when they cut rates, you just showed me in crypto, here's where they cut rates and it tanked. So, that's what I'm going to expect. When they cut rates, I'm selling everything. Might be you talking right now as you watch this video. Look at this. This is when they had the rate cuts after higher for longer. A year and a half, 2 years later, there was the bottom, like 50% down, maybe 40% from this point. That does it. I'm selling. Guys, that is not the whole story. What we had going on here and here, are there similar economic challenges today that might be in front of us? Sure. However, we have to keep an eye on these white lines. Remember what the white line is? That is inflation. And the reason why I bring that up, we're going to go on an adventure together. Oh my God, look at all these rate cuts. Look at all these white spikes. You might remember, we're going to look here at the 70s. You've probably heard or seen a lot of channels, whether on the news or YouTube, talking about inflation. And the most comparable area we have to look at is the 70s because we had 3 inflation spikes in the 70s. I'm going to show you what that is right now. If you just go to Trading View, click all United States inflation rate year over year, take it off log scale, of course, and those three spikes, again, I found the very top, and that's where I put the dashed white line on the S&P chart. So these three spikes, inflation 12%, 15%, crazy. Remember that other inflation spike I showed before the great financial crisis? That was this one. I just wanted to see where it was at. But going back to the S&P, so yeah, we're going to go back, put it on a log. That was that one inflation spike I was just talking about before. But going back to the 70s, those three spikes were right here. Now, the reason I bring this up is I also want you to look at when the Fed was cutting rates. These are these red dashed lines, okay? And you can take a look at when the Fed was doing rates herself. I believe if you just type in rates, here we go, U.S. interest rates. If you take a look at that, taking it off log scale is better. But here you can see when they cut as well. So United States interest rate, you can see when they cut. And in here, when they cut too soon, inflation spiked, and they had to raise rates higher for longer. Okay. So hey, I want to show you guys this. So, this isn't just a trust me bro video. But when the Fed was cutting rates, those are the red lines here. Okay. Now, where do you notice those red lines are? Well, the first rate cut was somewhat close to the bottom. The market was already correcting when the Fed did their first rate cut. And I know, guys, this is like, 50 years later? Okay, it's a different market, I understand. But this is the last relevant data point to what we have today. Okay, it already corrected almost 30% here. Okay, and the inflation peak was down here. The Fed, they cut rates at the top, like we showed you before, and there was another big correction. By the time they cut to the bottom, it was a 10% down. Here they had another cut, kind of near the top, and then it went down another 20%. But then here, once we were done with all that, look at what happened after the Fed cut rates this time, after holding higher for longer. We started going up, and things actually got parabolic. Even after the whole 87 flash crash that you've probably heard of, this was a good time to get in. So the point I'm making here is all because the Fed is cutting rates does not absolutely mean that that is the time to get out. Now, historically speaking, yeah, rates have been a little bit higher, but here, if you weren't buying in here when they were cutting rates, you would have been missing out, because after this dip, the market never went under here again. It went to it. So I think you have to consider those factors as well. Again, I'm comparing the S&P to Bitcoin, but I think we also have to watch what inflation does. If the Fed cuts rates next month, or maybe they cut later this year, maybe they're going to cut when we're predicting, loosely, air quotes, predicting when we might be seeing a peak in Bitcoin. In a perfect world, Bitcoin dominance, it's tanked to the low 40 percentile. It's at the end of December, and the Fed's cutting rates, and you're like, this is the top for so many different indicators. I'm taking my profits. I'm keeping my money safe for a year or two. Okay, I understand. Maybe that's what happens. Or maybe inflation is going to be the big problem, and that when they cut rates, or if they try to, all of a sudden inflation starts spiking. And then they have to raise rates again. And recently, as the Fed has raised and held rates, things have been bullish. And so from what I've seen on the charts before, when the Fed is cutting rates, there's a couple things to watch for. One, how does the inflation rate react? And you can keep an eye on that yourself. whether on the charts or in the news. How does inflation react? Right now, guys, there's no easy answer to this question. That's why I'm showing you this. I try to simplify things, but this is a complex problem. When they cut rates, maybe later this year, who knows, is inflation going to start spiking? Because if it does, they're not going to keep cutting rates. They're going to probably raise rates again. Now, you could get into the whole thing about stagflation, where GDP is going down and inflation's going up, and all those factors. Maybe we're heading towards a stagflationary environment. Who knows? It's starting to look like that's possible, but the Fed targets 2%. And if all of a sudden inflation starts falling comfortably down here, then yeah, maybe the rate cut situation is going to be more similar to what we had in the dot-com bubble and in the great financial crisis here and here. Okay? Maybe that's what crypto does. But I don't know. If they cut rates and inflation starts to spike, and they're probably going to raise rates again to really squash inflation higher for longer. And that might mean, like it just did for crypto, that we're going to go up again. So there's no easy answer to this. If they do cut rates, the other thing to watch for is the rate at which they cut rates. If they are cutting rates big, with big numbers and really fast, then yes, typically speaking, the higher the amount and the faster they cut, the worse that is coming in the downturn. And then yes, I would say, okay, we might have a peak wherever Bitcoin is. But if not, again, watch inflation, see how that reacts for whenever they do rate cuts. I also, guys, I remember, what was it, half a year ago, even just a few months ago, but half a year ago, people were obsessed with talking about rate cuts. And I remember seeing all these charts and graphs like, rate cuts are coming, it's like 90 or 60% guaranteed. Rate cuts in March, rate cuts in May. And it never happened because inflation has been sticky. So some people are now thinking, hey, maybe they don't cut rates at all this year. I don't know. I don't care as far as right now. But as I teach you on this channel, it's better to have patience, have your own plan, and react to the situation that presents itself when it happens. If you have a plan, you'll know how to react. I can't make your plan for you. You have to make your own. And maybe you're just setting a price target, you're accumulating whatever altcoin it is when you hit some good moving averages, dollar cost averaging in, whatever. You have to make your own plan, but be nimble. Rate cuts, as I've shown you, don't always mean that things are just going to fall off a cliff. It can mean that, but that depends on the economy and where things are at. I don't know where things are going. So, and I don't pretend to know. But I do want to present multiple scenarios, good and bad, to look for and let you be the judge, let you prepare and consider that information as you make your own plan. Of course, nothing I say here is financial advice. Guys, I hope you enjoyed this video. I'm going to keep releasing these Bitcoin rainbow chart videos as well as Bitcoin mining stock videos every week. I also talk about Magnificent Seven stocks and earnings reports for stocks every week. So keep an eye out for those, because with how volatile Bitcoin and crypto is, I like for that money to be safer. And if I make some crazy good profits, I might hold on to that money and put in during a downturn that's 20, 30, 40% and let that money work for me for the rest of my life instead of having it in something volatile like crypto. I don't pretend to know or have the faintest clue where Bitcoin is going to be in another 10 years, whether it's going to be dead and gone, like pets.com and other stuff during the dot-com bubble or if this is going to revolutionize financials for the rest of our lives, because bricks and the dollar and all that sort of stuff and inflationary money, if you will. So, hedge your own bets. You got to put your money where your mouth is. But I do try to be objective in my viewpoint, give you data, and let you guys do with that what you will. So yeah, if you have any questions on the rainbow chart or certain things you would like for me to talk about in next week's video, please comment below. Sorry that inflation talk took longer. My goal is always talk quicker, which I'm failing horribly at. My goal is always talk quicker and to simplify things. And I apologize for the fact that talking about inflation and the rates, that took a while, and maybe I hope the message came out clearly in an understandable way. I never want to talk over people's heads or dumb things down too much. I try to present this information as if anyone out there was a 10-year-old. Not that I would ever recommend 10-year-olds investing money in crypto, but who knows? Maybe it would be a good idea. Who's to say? Anyways, guys, thank you for watching. 41 minutes, my God. Thank you again for any of you who are watching, and I hope you have a wonderful week. Happy June. Take care.